Eitel Insights podcast. We've got your podcast host, Andy Park. We've got an exciting episode for you today where we had a lot of fun in the last one taking a look at the 2019 detached Greater Vancouver market. And we're going to do the same with the condo market and see how it might stack up with what we might expect in 2020. But before we dive into the data, Dane, how are you enjoying this frigid weather we're having?
Not a big fan, brother. I mean, it's nice to see it come down and kind of blanket the city, and it looks tranquil for a little while. But now that it's been here for 2 days, I'm over it. It's muddy and the streets are slippery, and I don't really get out to drive around that often. So yeah, I'm done with it. I'm ready for it to be gone.
Yeah, so
I'm ready for spring to come already.
Fair enough. Just a bit of a personal experience. I was in Whistler last week doing.
Right, you were saying before we were recording here.
Yeah, for sure. I was doing figure eights in the public rink that they had there, skating around, and I did the same with my car. Earlier this week.
Not the same feeling, is it?
Yeah, one's a little more death-defying than the other.
There you go.
But let's dive right into it. So give us a bit of an assessment in what happened with the average sales price for condos at the end of 2019, and what do we think is going to happen at the beginning of 2020?
Right. So why don't we just toss the chart up here? Basically, what happened at the end of 2019, December sale price came in at $667,000. Which is, a nominal change, just slightly lower than the November price, which was $670,000. And what's interesting about that is there would have been a nominal change in the detached market had it not been for that Pemberton kind of outlier that we discussed in the previous podcast. So please check that out if you haven't heard it yet. We're still very much in this kind of divergent trend, which is very interesting. And over the course of 2019, what we kind of take out of it, out of the technical price chart, is it tested that middle threshold, right around 650 to 675 to 670, right? So that's where this market is kind of lived within. We do anticipate it to lose steam again going forward with the prices going into 2020. We'll definitely, retest the 625, 630 mark that we have previously tested a number of times. And I mean, we could see again a day of reckoning. There will be a day of reckoning upcoming, whether it be at the end of 2020 or 2021. Time will tell, but eventually we'll meet up with this 10-year uptrend, which was indicated by these two black uptrend lines. We've broken long time out of that growth cycle that had propelled the market up to all-time highs of just over 751,000 back in January of 2018. So from that market point, we're off 11%. We have been off lower. I believe our lowest was around 15 when we were right around $637,000, I believe it was. So, we're going to anticipate another test of that and possibly even a test right around 580, which is that beginning lower third. So that's what we could expect when we do officially enter in this 10-year trend. You'll see a snapback. It's kind of like it's got its heart broke, so it's going to go back for some solid ground. So a possible test in 2020 of 580,000 isn't out of the realm of possibility. And then we see where we go forward. Ultimately, we are expecting, early or mid of 2021 to be the kind of culmination of these de-escalating prices where we actually see prices settle right around 525,000. Now that's a 30% price differential from top to bottom, or price correction, which is a scary thing. And you're going to see a lot of inventory really show up here over these next coming years, upcoming months for sure. And you're going to see the introduction here of 2020 of that brand new completion market. There's other quotes of some high numbers that are really going to show up, which is odd because, the guys that are quoting the high numbers, they've kind of been going back and forth whether this market's bottoming or it's, going to go worse. We've been solid. We're not been talking out of both sides of our mouth, and it's proven up, right? So just quickly before we move off the total prices here, so 2018, the average sale price of the total year was $713,000. So for 2019, it actually lost $52,000 and ended up at $661,000. So, had you listened to us so far, you've saved half of $100,000, which is a decent down payment, right? We do anticipate further savings going into 2020. Again, save your money, right? Wait till 2021. If it's your first purchase, it's going to be a glorious thing. You're going to have a ton of inventory. There's going to be foreclosures. There's going to be optionality everywhere at decreased prices, and some desperate sellers out there, right? Some desperate banks, some desperate developer owners, right? So you can really take advantage of this unusual market behavior, right? We saw a bit of this in 2008, and that's why they say, and other analysts have said this is it, because this is similar to this is going to be a lot worse than what 2008 and 2009 ever hoped to be. This is similar to the 90s market, where we've been in this thing for a long time, right? So usually markets would be kind of ready to move on from this echelon. However, we're in an unusual market cycle. We are going to be in this phase for a prolonged feature and continuously lower prices. So it behooves the buyers to wait. And similarly to the detached market, where we spoke about it last year, and we said, sellers take advantage of this. Again, sellers take advantage of this time. If you're thinking about selling in the next couple of years, it would behoove you to get your market properly listed, maybe with an Eitel Insights preferred realtor, one of the guys that work with us, guys or gals that work with us, and can really properly promote your market to capture an audience that is very rare right now. Because later on, that audience, there still will be an audience. However, they're going to be expecting lower prices. So if you're expecting to sell or needing to sell, get it, bite the bullet, get it over with, rather than chasing this market all the way down, which there's lots of evidence in that. And we'll actually get into the inventory and the sales numbers here later. But with the inventory, you're seeing a lot of people just kind of give up, right? And that's not a good thing, because if you needed to sell, giving up isn't an option. So you got to get forward and get ahead of this lagging market, rather than just get caught up in this wave.
Yeah. So I wanted to get your comments just on some general topical information that I've come across, and just as a bit of a caveat, I'm not an expert in real estate technicals.
Right.
I don't personally have skin in the game, but I am interested in what I see on CBC and global news when I tune in, and a lot of the prognostications that are being given by the major media outlets make 2020 look pretty rosy, which for someone like me, can you help me resolve that cognitively? So you make a very compelling case of what you think is going to happen with the market in general, but how does that compare to what people might be seeing in the media reports, and what's your commentary there?
Well, that's interesting. Why don't we just pull up the sales chart, and that'll kind of give you an example of what they're talking about, and maybe what a little bit of what we're talking about as well. I mean, reality is reality, right? So sales in December for the condo market year over year are up to the tune of 88%. Wow, that's awesome. However, it's up from 539 sales of this time, of December of 2018, which was cataclysmic, other than the
2018, correct?
Yeah. Correct. Yeah. So December 2018, 539 sales. Condo sales for 2019 were 1,050, let's say.
Okay.
So we're up close to 88% according to all these numbers, right? It doesn't sound like that. That's more of a doubling to me, but there we go, right?
Okay. Yeah.
So that's the quote. And what's interesting about that, again, they're using a convenient time and place year over year. That's great. And it is great, but when you look at the chart, it's not great. You know what I mean? We're very much in that middle threshold. We've seen a lot more inventory. Also, you kind of had to expect a little bit of buying activity, given the fact that we were down so much in pricing, right? When you do have that stress test mitigation, and maybe some purchases are similar to the cost of rentals, you're going to get some purchases in some places, right? Also, what you've noticed, if you actually pay attention to the actual sales, individual sales that have taken place, which of course we do, you're seeing a lot of kind of higher echelon properties sell for maybe not the higher echelon prices that they were hoping to get. They're still high prices, but they're definitely not what they thought they would be, right? So again, you're seeing that haves and the have-nots of the market. So as far as the sales go, yes, we're back up we are over that 1,000 mark, which isn't a great, fantastic feature for Greater Vancouver. This isn't Vancouver proper. This isn't North Vancouver. This isn't Burnaby South. It's not an individual. This is all of Greater Vancouver's encompassing data, and just over 1,050 sales, coming from the peak where we were well over 2,300 sales. So it's an interesting thing. We do anticipate sales to not fall off the map and see sub 600 levels, sub 1,000 levels even necessarily, but you are seeing that discrepancy between the supply and the demand, and that's what we're really talking about. The demand is not there. There is a need, but it's not demand, right? And what we're going to experience is need-based selling, almost a demand to sell my property. I need to get out of this. So that's where it does favor the seller or the purchasers that are willing to wait.
Yeah. Okay, sounds good. And just before we move on, naturally, we have a great time doing these podcasts, and Eitel Insights business is funded by the report sales that you provide. So
for sure,
if people want to get a little bit more information on kind of what you're talking about here and how this might compare to what they're seeing in the media, how do they get in touch with you and how do they get access to this information?
Yeah, so eitelinsights.com, obviously our website. I'm on LinkedIn as well. There's I'm out there, right? So there's a variety of ways you can get in touch with me personally. However, if you do want the reports, and one of the interesting things that we alluded to at the very end of our last podcast is we've had a lot of demand for monthly information. We've been selling these static reports. Now, yes, the static report is maybe a little bit of a misnomer because we do offer a forecast, right? And it lives to it, and it's a great, wonderful tool. However, if you're really kind of in that nitty-gritty moment and you do need that monthly actionable intelligence, we are offering that as well now for sale. So if, again, you want to visit Eitel Insights, if it's your first time listening, we do have some of our features or, where we've been featured in the media before, other forecasts. We don't hide anything. We don't delete stuff. I mean, we've been absolutely accurate. And that's one of the separations between Eitel Insights and really any other analyst. I mean, big analysts, RBC, BMO. We called the top of this market in 2016-17. We've called for this fall. And, where, again, other analysts are talking out of both sides of their mouths. Sales are up, but we're expecting more inventory. So what's your actual conclusion? If you're just a market reporter, totally fine and fair. We're not asking everybody to be an analyst. We don't want everybody to be an analyst unless you believe that you know what you're talking about, right? We haven't been incorrect once. We've seen the board, we've seen other economists call for the bottom in 2018 and 19, and the market continues to go lower. And then the backtrack talk is, well, if you have a 20-year outlook, in the condo market, just year over year, you're down 52 grand, right? Mm-hmm. So, even if you have that 20-year outlook, we can still have you a better entry level. Mm-hmm. So what we speak about here and at large is Greater Vancouver, where we get the client base is if you're looking for Coquitlam, you're looking for Squamish, you're looking for Manitoba, for that sakes. I mean, we do right across Canada with the exception of Quebec. That's the one exception.
For Quebec.
Yeah, unfortunately, we can't really do too much to help you out there, but, we have investors that have said, what, we agree with you. Vancouver's not the place. Where should we be putting money to work? And they've been very happy with our answers. So we do offer that kind of service. We go all the way up to personal consulting for high-level corporations. But, if you're just looking for that monthly information, it's basically half the price of ordering static reports right across the year. So we're offering it for $1,500. What's interesting about that is, it sounds like a lot of money up front, and no doubt $1,500 is $1,500. However, the thousands and thousands of dollars that we're saving you or potentially making you, it's a drop in the bucket, in all honesty. So there's our little ad. I don't really like doing that kind of stuff, but of course, like you say, that's how the company makes the money.
Yeah, exactly.
So.
No, this isn't a veiled promotion. It is actually a promotion, but I mean, it funds our podcast. It funds the good time that we're having doing this, and
absolutely.
I think I like to think the service you're providing is beneficial to.
Well, I can tell you the people that have our client base is very, very happy, and we've basically started from scratch a few years ago, and we are somebody in the market now, which is interesting, right? And the only way we've gotten there is by being correct, and that's how we anticipate going forward. It's not by having friends of friends or paying copious amounts to the media to be covered all the time. We're only covered by the media because we're just so darn accurate, which is a great thing.
Okay, sounds good. So with that said, let's do a dramatic turn into the inventory data, because you actually did mention that in the promotion that you gave. So what's going on with inventory? Because I actually saw some media releases saying that there's more coming, and that might be a good thing, that might be a bad thing. What's your assessment there with inventory?
So I just tossed that chart up. Definitely more inventory is coming, undoubtedly. So basically where we ended the year was only at 3,025 listings. That was fairly massive drop off even from the month before, where we had 4,100 listings.
And sorry, is that typical for December?
It is a typical seasonality thing. However, it's not usually that seasonal. Right. So I do believe that it was a lot of sellers fatigue and just, we're going to reassess. And I am anticipating seeing a lot of these listings coming back on the market in the first quarter of the year. Okay. Maybe with different realtors, maybe at different price. Well, hopefully at different prices for the seller's sake, let's say. And you know what? It might be that, what they're saying, maybe it's getting better in the first part of the year. So they might come on in the market in the summertime. That being said, we are going to see the realization of some of these condo markets complete in 2020 and going into 2021. So as soon as you see a few of those, we're going to see hundreds of listings, right? They're not all going to show up on the MLS. If you're a developer, you only put 5 of them out, even though you got 50 in the background, and it's kind of a shell game there. Fine and fair. That's part of the market. But the homeowners, if you own 5 or 6, you're going to put 2 on the market, and you're going to put them all on Craigslist for rent. And if you can rent them out, great. If you can't, you're going to leave a couple on the market. So you're definitely going to see a flood of activity, inventory show up. And what's kind of funny about that, the buyers, after so many years of it being a seller's market, they're not going to be in a hurry to bail these sellers or listings out. They're not going to say, you know what, tell you what, I'm going to eat that 20 grand. They're going to really kind of enjoy seeing this fall from grace. And they're going to wait and see, see those prices bounce a couple of times. And then they'll step in, right? So it's nothing that... It's a deal as soon as it drops 10 grand. Once we kind of see this effect of a lowering market come to reality, even more so than what it already has been, they're not going to save these sellers. They're going to enjoy watching these prices go lower and pick up equity for themselves going forward. Again, there will be a day and time to purchase. We just don't believe currently it is, or going forward into 2020 for the condo market it is either.
Okay, sounds good. And then kind of finally, let's talk about days on market. So obviously this is a number that I always like because it's something that's easy to wrap my head around, right? Not being an expert in this market. When you list your property, how long does it stay on before someone picks it up? So these are very consumable metrics for me and probably the broader customer base. So what happened with the condo market with days on market?
Right. And so it's up on your screen now. What's interesting, again, to your seasonality point, so we just took a year over year, right? Again, maybe not exactly the best case, but still it's some data points, right? So December of 2018 finished off at 47 days on market, 2019, 48 days on market. Let alone all these dramatic increase in sales and this and that and loss in inventory. To get a sale, to achieve a sale, you had to rate 48 days on market. Last year it was 47. So it's a very similar point. I don't really see any market changes. Of course, you do have your seasonality. In December, in the colder months, you have longer wait, you have less purchasing. What's interesting is, in January, and there's a lot of money that comes into the market, let's say, right? So there's a lot of purchasing sometimes for that condo market, that first time down payment. What we might suggest is, again, getting at the very least a static report so that if you did get some gift money of a down payment and it does look like prices are lower, in your individual area, how much lower is it going to get, right? Because honestly, in condo markets, pretty much across the board, they're all going lower. If you're selling, you might want to know how much lower so that you can either take the bullet now or maybe, you can wait the whole period and time out. So that's where we really do offer that actionable intelligence. In the detached market, there's a few select markets across Greater Vancouver that look technically like they're close to the bottom. In the condo market, we're not there yet. I mean, it's going lower, brother, right? So that's the interesting thing. There's some opportunity here for the sellers to kind of get out of hawk, and there's great opportunities for the buyers to just simply wait. But to just simply wait without any real actionable intelligence or any information at your disposal, that's a tough thing to do, right? And so that's what, honestly, when you get the reports, you go, my golly, like, at the very least, even if we're dead wrong, you're going to have some time here. And the technical data points will say, you know what, hey, we're wrong. Maybe now the time is to purchase over the next 6 months.
Right.
Very unlikely that's going to happen given our track record.
Right. Knock
on some wood here. But, so that's the kind of what you get for $250, what you get for $1,500 is that ongoing information. If you got a lot of property to sell, it might behoove you to get them monthly. If you just got the one-off purchase, and you're kind of starting to think about it, or you've been thinking about it and now you're wondering if it's a good time, that static report for $250 takes care of so many concerns, gives you a great night's sleep, and it gives you actionable intelligence of maybe when to buy the next static report to see if we have to go in. And it's not going to be the next month for an individual. It's probably going to be 6 months or a year down the road. And of course, follow the podcast and see what the overall trends are doing. But inclusive, what makes up the overall trends is New Westminster, North Vancouver, Tawasin, and all of these. And they don't all move in lockstep. Some are moving at different rapid paces. So it's very interesting. And that's why I love what I do. I mean, I see a chart, I got to chart it.
Right. Yeah, sounds good. Just the kind of ignorant question here. This might be interesting for some listeners, and I hope I learned something here. But with days on market, if somebody takes their property off just like you mentioned, there's sellers.
It does not count towards the days on market. The days on market chart that we show
Yeah.
is only if of the sales. So of the sales in that particular month, how many days on market were those sales? If you're an unsold property, you don't count towards the days on market, or else this would be much, much higher.
Okay, so if I list a property in, say, January, and I can't sell it, and let's say in March, I take it off the market, right?
Right.
And I put it back on the market in, say, June.
Yeah.
And then I sell it in 1 day after
That's 1 day on market. That's 1 day on market, exactly.
Okay.
It's a good question, and that is a trick. Realtors and myself in the past, when I was just a mere realtor, that's something that we do, right? It's to catch eye, right? So if you've been on the market for 60 days, you'll probably take it off and relist it, and it'll get a new listing number. Then that old listing is gone and done, and this new listing is how we deal with the days on market.
Okay.
Now, kind of that being said, what's again interesting is these are of the sales. It's not of the expireds or of the given up hopes.
Right.
So to get a sale, you need to wait 48 days on average.
Right.
So, I mean, now that takes in the guy that's been on the market for 120 days and just wanted his price and then finally gave up and accepted a bid. Yeah. And then that one that does sell in 1 day after it being, maybe reduced in price $20,000, and it's a, attractive feature, right? Yeah. And so that's why we deal with averages. Again, I personally believe averages is better than median. It's up for debate, to each their own. But, on average here, we're still seeing a very similar December from 2018. 2018 going forward to 2019 was not positive. I really see a similar track going forward in 2020, just really across the base. Prices will be lower. Inventory will be surpassing their old highs of 2019, which were much higher than the previous years. Sales, and that's, they can stay nominal. They're not going to go through the roof. We're not going to see the demand dissipate the inventory. We're going to see demand show up because it's Vancouver, right? I mean, I'm not expecting 500 sales in a given month again. Yeah. That was really horrible times, and that was really dictated by a lot of withdrawal of your purchasing power. Yeah. Once that kind of mitigates, then we'll have some steady demand. However, market effects and influences are still there. In a down market, not too many people are just greedy going to want to buy, right? When the market starts heating up, then you'll see the greed factor come in again. That will eventually return in Greater Vancouver. We're not doom and gloom forever. This isn't Detroit. We're not the auto industry and it went away and we're going to lose all of our value. Yeah. Never going to happen. Right. Vancouver's a great investment. However, there's more ideal times to invest and less ideal times to invest. In the condo market, it's not time yet to invest, in our opinion.
Okay. Well said. So with that, thank you as always for joining us. If you found this information helpful, give us a thumbs up, smash that subscribe button. Anything else, Dane, before we sign off?
That's it, buddy. Smash that subscribe button.
All right. Had a lot of fun as always, and we'll see everyone on the next one.